Hey guys, Mike here. So today we're going to go into a lot of charts. We'll start off with a shorter term time frame to see what might happen this week by going through certain indicators, and obviously there's debt ceiling thing going to take place. We'll talk about that for a minute. But more importantly, I'm going to pan out. We're going to take a huge aerial view of what's happening in the market by using the weekly and monthly time frame. You might be surprised at what you see, because if you stay on the shorter term time frames, you tend to miss the forest for the trees, or you can't see the forest for the trees, however you want to put that. And so that's why we're going to look at that, because again, you might be surprised on that. But I did just want to say real quick, obviously today is Memorial Day. This is the day we celebrate the memories and stuff of our fallen soldiers, the soldiers who gave the ultimate sacrifice for this country. And for me, more importantly, obviously I come from a big military family. I was in the military. So, it's one of those days where I like to sit down with my son and have a, age appropriate conversation, because he's only 7. About what it is, so he does understand that these rights and these freedoms and excuse me, everything we have here, it just isn't given to us, right? People sacrifice their lives to make sure we have it, right? And I think obviously most people are probably thinking about World War II, the greatest generation who, fought the Germans and Japanese and stuff to make sure we stayed speaking English, I guess, and we stayed America. And so, that's what I think about. But there's been so many wars and conflicts that we sent our men and women into, and a lot of them didn't make it home. And I just want him to make sure he understands that you need to keep them in mind, and don't take for granted what we have here in this country, right? I understand people have made some big sacrifices, and some families have made some big sacrifices, and so keep that in mind and everything. I think it's hopefully the one thing we still agree on as a country, right? Even though we may seem divided in a lot of different areas, I think this is the one where we can all come together and obviously celebrate those veterans and stuff. So, just wanted to say that real quick. So, anyway, let's go ahead and get into the charts and everything. And we'll start off with the Qs. And you can see by the chart, obviously, what happened. We broke the April highs and stuff. Now we get to see if we're going to turn to support before we head up and start to see if they fill that gap. It starts at 356. And so if not, obviously we still have a bunch of gaps below, but there's also a ton of support now built in below as well. One thing to keep in mind, if you go from the October low to the all-time high, we did last week hit that 618 Fibonacci level. That is a key level where you would normally get a pullback. It's usually 0.50 or the 618, the golden pocket area, where you'll get that. And just kind of show you what I'm talking about on these fib levels. It is a powerful tool and stuff. And for example, you can see when we had this move up, it hit that 618, boom, sold right off. And then if we move over to another one here, you can see we hit the 618 again, and we end up selling off. And then if we go over a little bit, you can see this one hit the 0.50 3 times before selling off. Then the next move up ended up hitting 618 as well. So we'll have to see if we get a pullback on that or not. And again, usually the algos kick in on that one. But I'll tell you right now, what's amazing as this is happening, obviously the dollar has been moving up, right? And you see tech in the face of it doesn't care. Normally when the dollar goes strong, tech sells off. I've showed it to you many times. But you can see it's been moving up in May, and tech hasn't cared one bit. And when you go through here and you actually add in the yields on top of that, the 10-year and 2-year yield, everything is going up. The dollar, the yields, and tech has been going up through this in the face of this. So that is amazing. When you look at the charts any other time, that is not the case. The tech has sold off when yields and the dollar are all moving up together like that. And so put in the comments why you think that's happening, because usually there's no rhyme or reason to it. And besides, hey, there's this AI euphoria and people are just piling into this. But, understand this about the 10-year yield especially. You can see in this, it's traded in this channel multiple times now, and it's sold off multiple times when it hits the top. It's bounced when it hits the bottom of this channel. And you can see right here, it's heading up to hit it again. When the RSI gets to overbought, as you can see both times, you get a bearish MACD cross. You get a nice sell-off to the bottom of the channel, and you can see where we're heading now. Starting to get overbought. Looks like the MACD wants to roll over on this yield. So we'll see if that happens. I can have more fuel to the fire for the NASDAQ. And then the dollar, of course, is coming into heavy resistance around that 105 area. If it even makes it there, you can see the MACD looks like it wants to roll over. It's going into overbought territory. When that happens, normally it sells down. So we'll have to see on that one. If that happens, you're talking about more fuel piled onto the fire for this tech move. And before we continue, guys, if you get anything out of this, please hit that like, subscribe button. I really appreciate it. And think about sharing the video. And if you like the content, think about subscribing. So let me know in the comments what you guys think about that and what you think is going to happen with the yields and the dollar and the fact that tech is just moving up unbelievably in the face of all of that, okay? And so now what I want to do is pan out, taking a large aerial view of what's happening to these indexes on the weekly and monthly charts, right? And kind of compare it to what's happened in the past. And when you look, this is the NASDAQ Composite Index, so it has a lot of stocks, not just the NASDAQ 100, right? And what do you see here, right? You got your MACD already over the zero line on the weekly here, which is bullish. You end up not overbought, okay? Still got plenty of room to run, you know, obviously. And then if you look at that, you say, okay, well, what happened in the past here? I mean, what does this look? Bearish, bullish, whatever? I mean, it looks bullish, obviously. But when you look at other recoveries and you go back to 08, for example, and you're looking for the same thing, when do you actually see it? It's when it started to recover basically in the recession, right? We hadn't hit a recession yet officially. Okay, I think we can all agree with the unemployment rate, the spending we're doing. We've not hit a recession yet. There's just no possible way. And you know, when you look at it though, looks pretty much identical to what we're seeing now, right? And so then you go back to 01, right? Same thing is happening right here. You see the big sell down. They had a recession. The market kept selling down. But when does it look bullish like we're seeing right now, where the RSI isn't overbought, but it's over the 50 line, the MACD is over the zero line, and it's right here, right? And so when you look at that right there, that looks pretty familiar. Again, remember what happened. The market sold us off too early because the business cycle or the economic cycle is totally out of whack right now. And then we'll go to the monthly here, and you can see, you know, what's happening. You got the RSI over the 50 line, and look at that MACD down there. That looks like it's fixing to form a bullish cross, okay? And when we look at that, is that bearish? Nope, that's bullish, right? Even though we know the economy is slowing down, nobody's arguing that, and it's probably going to continue to slow down for sure as the rates take their effect. Right now, though, this is what's happening, all right? And this is on a monthly time frame. Keep that in mind. And we look back at, again, the two big recessions we went through in 08, 01. You know, when do you see a MACD cross like that, the RSI looking like that? Starting the recovery. And so keep that in mind. Then you go to the S&P, right? What do you see happening? Again, RSI is over 50. It's heading up. MACD looks like it wants to do a bullish cross right there. And then you see the IWM here on the weekly, the exact opposite of what the other two are doing, right? You got basically the RSI below 50, the MACD is below the zero line. Maybe it's trying to do a bullish cross. You can try to make an argument for that on the weekly, but you got the monthly again. RSI is below 50. MACD is just hovering on the zero line, trying to curve up if it can get a move up. But it's just the total opposite. Now, one thing that should happen, this is the monthly chart. It may take another month, maybe 2 months, but eventually this thing's going to have to choose a direction, right? Because it's been sitting there around that 174, 176 area. It's just, again, is it going to break out? You would think it would, just as beat down as it is. But again, if there are stocks that are going to be really affected by the high interest rates, which is the only reason really this isn't breaking out, is because we're sitting in a high interest rate environment, and these are heavily debt-ridden companies, okay, that really need that. So keep that in mind. Now, one reason you're seeing tech, especially the Qs, go up as fast as it is because there was a huge rotation that started at the end of April, if you didn't notice it. And I told the members about this last week in the video, but you can see right here, there's XLK, and then you got XLP, XLV, XLU, all the defensive moves that were going up, right, from March into April. Then all of a sudden, a huge shift. The big money just pulled out of these right here, and there's no doubt a lot of that money got rotated into the tech move, okay, the AI move and all that good stuff, because it was a lot of money. You can plain as day, you know, see that right there. I mean, I think that's a good picture of that. So, you know, keep that in mind. That's one reason. And then we zoom in on consumer staples. And this is important because this is what, you know, focuses on us, the consumer, right? The spending, right? And you can see right there, before any major recession, what happens to consumer staples? They fall off a cliff. That's what happens to it, because we start spending less, right? And it's because the economy that's what causes the economy in a way to start slowing down. And so you can see this going to any recession, even for 2020, we started actually spending less. And if you're not familiar with what consumer staples is, This right here is some big names, right? Like Procter & Gamble, they make everything. Coca-Cola, Nestle, Walmart, Target, Kroger, right? And what have you heard on a lot of these calls is we're actually spending less as far as like the number of customers or the amount of stuff we're purchasing, but things are so much more expensive. It looks like we're actually spending more, and that's just not really the case at all, especially in lower income brackets, which are getting hurt the most. What else is happening? And again, a picture's worth 1,000 words, guys. This is value, which is IWD, versus IWF, which is growth. And you can see 2022 was what? All about value, safety, and what's 2023? Absolute growth. I mean, complete 180 on what has been happening right now. And so, and of course, obviously that means tech, right? Tech has been booming. That's why. All right. SPYs versus the Qs. 2022 is all about the SPY because what was happening? Oil companies and all that good stuff. Yeah, let's get into it. And then what's happening in 2023? Forget the SPY, forget oil, forget banks, forget all that stuff. We're going straight for tech and AI and all that good stuff. And that's what's happening. And one reason you're seeing this is because with this whole AI craze, like we've never had AI before, the thing is there's not a lot of stocks, right? There's no picks and shovels type of stocks out there, okay? And so you got to understand that what happened when we went through the EV craze. All these companies started popping up. Ooh, here we go, Lucid and all these other companies started coming out of the woodwork and people started just piling into them. And that's what's going to happen with this AI craze as it continues to go. All of a sudden, all these other companies are going to come popping up. I looked at some companies, I'm not even going to share their names because they're hot garbage. These companies are garbage. I'm talking about stocks that I IPO'd like a year or two ago, supposed to be AI, right? These stocks are so far down, like 99% down. They're like penny stocks now, right? But what's been happening since the NVDA boom, right? These stocks are moving too, right? And there's no business in them moving because they're hot garbage. I don't know how they're still in business, right? But that's what's happening. Anything has to do AI in it, this, that, and the other, boom, going up, and they're going up so fast, right? So just imagine, because there's going to be companies out there that say, hey, let's take advantage of this, right? And so you're going to start IPOing or coming out, and so people will start piling into them just like you did with Fisker and Lucid and all the rest of these companies and stuff. And so that's what's going to happen. But right now, that's why NVIDIA and all the rest of them are going to the moon, because there's really not a lot to choose from out there that most people know, right? I mean, you have to dig deep to find some of these garbage companies, right? And so, but that's where we're at. It's the EV boom all over again. How long will that continue? We'll have to find out and stuff. But at least, hopefully seeing those charts, seeing the aerial view going, wow, look at that monthly there. That looks pretty bullish, right? Can things change? Of course things can change. What's going on this week? Debt ceiling. I told you yesterday, you got to try to get this thing voted on. What happened in 2011? They got an agreement in place and everything else, and the market sold off 20%, right? And so, is it going to be that, a sell the news event? We'll have to find out. Can they even get it pushed through for the vote? Is going to be another big thing, because you're already seeing, here we go with the crazies, I like to call them, coming out saying, no way I'm voting on this, and me and my caucus, and all this other stuff, and trying to do these power grabs. So we'll see if they can push it through smoothly. That would be nice, right? But we'll have to see. Again, it's a dog and pony show or a circus up there. But in the ultimate end, I would hope they get it pushed through. I think we all want to believe that. Unfortunately, my faith in those people tends to wane with every single decision they make. But that hopefully this kind of gives you a good perspective. Let me know in the comments what you think and stuff. And there's a lot of other charts out there. I just didn't want to make this a 30-minute video, but hopefully you got something out of it, guys. Hit that like and subscribe button if you did. I really appreciate all your support and everything. And if you want to try out the Patreon membership for 7 days free trial, give it a shot. Less than McDonald's combo. All right. And I won't be here tomorrow. I'll be spending time with my son in South Florida. So I'll catch up with you guys on Wednesday, most likely. I think I will. So we'll have to see. So anyway, have a good one, guys.